Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings behind corporate filings and make it easy for you to understand what's really going on with the companies you care about. Today we're diving into Cyngn Inc.'s latest report, and let me tell you, they've got some interesting plans to put their stock to work. So this is a current report, basically an announcement of a significant event. Cyngn Inc. is letting everyone know about a new deal they've made, and it's a pretty big one. The main event here is something called an at-the-market issuance sales agreement. Think of it like this. Cyngn is telling the public that they have a way to sell their company's stock, their shares, whenever they think the time is right and the price is good. They can sell up to a whopping $100 million worth of their shares. This isn't like a big single sale where they decide to issue a bunch of new stock all at once. Instead, this agreement allows them to sell their stock little by little as market conditions allow. This means Cyngn can go to the market through a sales agent named Accession Capital Corp and sell shares whenever they feel the price is right. The price will be whatever the stock is trading at on the market at that moment. This keeps things flexible for them. Now, Accession Capital Corp, the agent helping them sell, doesn't do this for free. They'll be getting a commission of up to 3% from Cyngn for every share sold. So if they sell $1 million worth of stock, Accession gets up to $30,000. It's important to understand that this agreement doesn't force Cyngn to sell any shares, and it doesn't force Accession to buy them. It's more like having an open door to sell their stock if they choose to. These shares that Cyngn might sell would be under a special kind of registration statement. Think of it as a pre-approved plan to sell stock that's already been filed with the Securities and Exchange Commission, or SEC. This makes the process of selling shares quicker when they decide to do it. The specific agreement detailing all these terms was actually filed with the SEC on September 5, 2025, which is the date of this report. It's also worth noting that Cyngn Inc. is identifying itself as an emerging growth company. This means it's a relatively young company that can take advantage of certain regulatory benefits, like having more time to comply with new accounting rules. This is a common status for many growing tech companies as they try to scale up. Now, for those who are keeping track of Cyngn, their common stock trades on the Nasdaq Capital Market under the ticker symbol CYN. This is where you'd see their stock price fluctuating daily. The management seems to be actively looking for ways to fund their operations and growth. This kind of agreement gives them a lot of flexibility. They can raise capital without the immediate pressure of a single large stock offering. This can be good because it allows them to react to market opportunities and sell shares when they believe the valuation is attractive, which makes sense from a business perspective. The date of this filing, September 5, 2025, is key as it marks the activation of this new financing strategy. This filing also includes an opinion from their legal counsel. This is standard practice, basically confirming that the shares they plan to sell are legally valid. Think of it as the lawyers giving the all clear. The actual agreement with Accession Capital Corp is attached as an exhibit. It's like the detailed contract that lays out all the specific rules and procedures for selling these shares. So looking at this filing, the big story is Cyngn move to secure a flexible, long-term financing option. They're giving themselves the ability to raise a significant amount of money if needed by selling their stock gradually in the open market. This strategy allows them to tap into capital depending on market conditions and their specific funding needs. It's a proactive step showing they are prepared to finance their future growth. From my perspective, Cyngn is playing a smart game here. By setting up an at-the-market offering, they aren't committing to selling stock immediately, but they have the option ready to go. This shows strategic financial planning. The ability to raise up to 100 millions like this gives them firepower for innovation expansion or whatever strategic moves they have planned. While the commission to the agent is a cost, the flexibility gained by not being tied to a fixed offering price or schedule is often worth it for growing companies. It's a move that suggests they are optimistic about their future stock performance and want to be able to capitalize on it without diluting their existing shareholders too much at any one time. It's what we call financial agility. Alright, that's our breakdown of Cyngn Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.